we've seen that the volatility increased about What's up guys, Steven Duck here. Hopefully you guys enjoyed the last video, and in this video I'm going to cover several points that cost me 100,000 in mistakes and 400,000 in profit. If I can realize these type of mistakes earlier, I could save me a tons of money. So I personally consider this is a very valuable lesson, and make sure to take some notes. If you have any questions, leave a comment below. And before I get into this video, make sure to click the like button and subscribe. And let's get into it. Recently, we've been seeing a lot of increased volatilities, and that got tons of statistics from different brokerage. And the number of people trying to open up new accounts based on Robinhood statistics went from 2 million to 12 million. So that's 6 times more than usual compared to 2017 and 2018. Now we're looking at the volatility in recently. Average volume would be getting back in 2 years ago was around anywhere between 20 million to 40 million per day. Highest would be 100 million. Now recently we've been getting around 70 million to 100 million daily, and the highest volume I've been seeing for the last week will be 500 million per day. Now, since we don't really know if that statistics was correct based on went from 2 million to 12 million on the new accounts, and we can use the recent volatility to verify if the Robinhood statistics was correct. As I said, the numbers anywhere between 20 to 40 million per day in average back in 2 years ago or 6 months ago. And we have 70 million to 100 million, the highest will be 500 million. So 100 million to 500 million, that's 5 times more than usual. If you want to average the people that are trying to open up new accounts in Interactive Broker, E-Trade, Centerpoint, or TradeZero, whatever brokerage you want to use, then I would say it's around 5 times or more. So we have an accurate number. Volatility increased about 500%, and people trying to open up accounts 5 times more than usual. Once we verify the statistics was accurate, let's get into a different viewpoint to how to really take advantage of the increased volatilities. Now let's get into typical market caps. For you guys that are relatively new, we majorly trading in small caps. Now we're trading in mid caps or bigger caps since there's so many opportunities laying around for the last month. The average market cap we've been trading is around 10 million to 50 million. Average float we've been trading is around 3 million to 5 million, right? Personally, back in 5 years ago, I was a beginner, and I also taught many students that started as a beginner as well. This is a very common human behavior. When you try to go long on stock as a noob, if you don't really know anything about the stock market, and you've seen something that's over, increased 200%, you want to get in to get more profits, and all of a sudden the stock drops about 50%. So you're holding at $1, drop to 50 cents. You're feeling kind of desperate. You don't really want to take that 50% loss. So your next instinct is to hold that positions for a long time until the stock comes back, and then you can sell it to break it even. Now, this type of mentality will affect many traders that comes into the market as a brand new trader. As we've seen, the volatility increased about 5 times or more than usual. That means there's much more new traders trying to involve into the same game. Let me give you an example. So back in 2 years ago, there's about 100 people, and there's 10 people that will hold forever if the stock drops 50%. Now we have 500 people trying to get into the stock, and there's at least 50 people trying to hold the stock forever. Now that will increase about 5 times or more compared to usual. Now, since we have a set amount of flow is anywhere between 3 million to 5 million, right? Since the amount of didn't change, and there's more people trying to trade the stock, and there's more people trying to hold the stock forever, that will decrease the supply in order to increase the price. That's why we're seeing gap up short, first red day, or bounce short, their behavior is getting much wilder than before. So in order to adapt into the current market condition, we want to increase our normal range of float and market caps. So what I did is I will increase all of the market cap range times 5 and all of the float times 5. So the normal market cap we've been trading from 2 years ago will be anywhere between 10 million to 50 million. And we want to increase that about 500%. So 3 million to 5 million statistics that we'll be using 2 years ago times 5 will be anywhere between 15 million to 25 million. And if we increase amount of market caps and the supply, that volume will treat these type of market cap as a typical low flow and low cap stocks. And basically nothing has changed. We have beginning a lot of opportunities, And that's where you can take advantage of all of the statistics that you tracked from 2016, 2017, and 2018. Gap up short, first red day, overstaying gap down, whatever pattern you want to call. And that's where you can take big profits from. Back into the beginning of the year, during January and February, that's where it starts to transition into the current volatility what we have now. And I wasn't very prepared. I was just using the average statistics, trading the volatility that's happening right now. That's where I took several losses because those gap up short and bounce short and some multi-day breakouts that doesn't really fit the statistics, and it affects the trading behavior into very weird range. And I've been getting faked out a lot back in January and February. Now I've already adapted into the current market condition and volatilities. I start to profit a lot more compared to last year. So based on all of the points that I talked about last 15 minutes, this is the perfect examples for you to really change your strategies and to adapt your strategy into the current market conditions. And you can use this type of examples to apply into different options or futures you're currently trading. Once you already adapt into the current market condition, then you can come up with new strategies since there's much more volatility than usual. What we're getting is much more opportunity than usual and also increase the frequency of the pattern. Before that, it will take a month or two to really adapt your strategies and to change where you should enter, where you should exit. And it sucks, you will take several losses in a row, but when you look back and treat your mistakes rationally and to figure out what you did wrong and what can you do to make it better. So that will be all for this video. Thank you very much for watching. If you have any questions, please leave a comment below and I will see you guys in the next one.